Morning all. How are we all doing? How is everybody? It's fine Friday. It's Friday at last. Thank God this week's over. Morning, Amy, JC, Evil, Yoko, Senji, Virginia, Steve, Mumo, Monkey, Kenley, Sagar, Gregors, Evans. How are we all doing? Coffee and an apple. Bit of a weird breakfast. Sagar. Anyway. Morning, Michael. Weekly range just hit on the pound CAD. Ooh, big move. I tell you what, I am loving this button. This button here. This close button. I can't remember who it was that suggested it, but what a brilliant button. Look at it. Look, pound yen in profit by $600. Yeah. Press that button. I just made $600. How good's that? That button does that. Good, isn't it? Look, it stuck it down there. Brilliant. That was up there. Now it's down there. So easy. Right. Anyway, New Zealand dollar CAD weekly range just hit as well. Looks like we've got a load of movement going on the Canadian dollar. Oh, a lot of movement going on all over the place today. Not quite sure if that is CAD. Don't think it is actually. Right. Yes. Exposure on the yen. I'm just going to close. What news have we got today? 1 second. Bear with me. We've got CAD retail this afternoon. I'm just going to close out my euro yen. I tell you what, no, I'm not. I'm going to just break even the euro yen because I want to reduce my exposure back down to normal. So we've had some decent movement on the yen today, and just want to stop my exposure being quite so high because I'm still not 100% convinced on what the Japanese have done. The thing that's worrying me, if you look at all the yen pairs, it's all going very well. Yen's coming down nicely, which is good. US dollar yen, however, isn't. And we are up at that all-time high threshold here. If that breaks and the market decides to buy a breakout of the US dollar yen, the yen is automatically going to get a little bit weaker. And I'm still not sure whether they're going to do an intervention move. So I'm just reducing my exposure because I've got US dollar yen short. I'm happy to hold the US dollar yen short still. But I've got out of this morning the pound yen, which is the one I just took off there with that magic button. I also used the magic button on the Aussie Swiss. I pressed it and money went into my account. And then the New Zealand dollar yen, I also closed it on that one today. So I've pressed the button 3 times this morning and earned a 5% gain on my account, which is nice. And Aussie yen, I've closed that one out as well today, although that one actually hit TP. So I didn't do that one. It just hit TP. Yeah, so I've closed all that yen out on this move down. What worries me slightly is obviously this just being a pullback on this. So yes, it's a lovely pullback. Yes, it looks like it's rolling over, but is it just pulling back in the uptrend? And that's what we're going to continue to do. So I'm just reducing my exposure. I don't have a problem being short against the yen. I'm just reducing exposure. Right. So, morning, everybody else. Harakti. Sarah. Michael said hello to Whipping Post. Yeah, that was me. You're welcome. Cool. Everyone owes me 5% per click. It doesn't work that way. But yeah, I'm still worried about hitting that button by accident, though. When I was putting the button on, I put it up there. I put it up there. I put it down there. I even made it just say CL, and the button was that big. And I hid it down here in this corner. And then I thought, if I put CL on it, all that's going to happen is I'm going to be bombarded by questions for people that don't read or watch videos in Telegram and Discord. What's CL mean? I pressed that button and for some reason it closed all my trades. It's like, yeah, because it stands for close. Work it out. But so yeah, I've decided just to stick it there, but make it a little bit smaller, a little bit grey, a little bit, I don't want to touch it, because you don't want to touch it unless you're in profit, obviously. If you do touch it when you're not in profit, it's going to hurt. But it's so good for pressing just and getting out. Like that. It's great. Right. So we'll have a look at what's going on this morning. Thoughts on the pound CAD? Looks like it's broken through support. Yeah, so pound basically this morning, we'll quickly cover the news. Pound, we got interest rates, retail sales. Interest rates are on my brain because we've had nothing but interest rates all week. Retail sales, we got 0 off of a 0.4 forecast. We were up at 3.6, but that is a seasonally adjusted figure because it's taken into account Christmas. So we're back down to normal buying and selling of stuff because we're all poor now in the UK. So retail sales is dead. So it's better than expected, but it's still bad compared to what it previously was. So movement this morning on the pound, as you can see, is a little bit negative. This move here was based off the Aussie dollar. Got out of the pound odd as well, by the way, this morning. I didn't realize there's another one there I just got out of in the middle of that propulsion gap. So yeah, that was a TP hit. So yeah, negative reaction on the pound to the retail figures this morning. So everything is coming down. Other news we've got today, we've got at 9 o'clock, we've got the IFO business climate, which doesn't tend to do an awful lot. We've got the Euro summit today, which is starting all day, which is the ECB meeting, if you like. But I'm not clear as to whether or not there's going to be any reporter questions at this at all. So I'm not sure if we're going to get any impact off of it, but there may be something that comes out of here that might impact the market. We had Lagarde speaking on Wednesday. Nothing much was said there out of the ordinary. So I suspect we probably won't get anything off of that, but he just needs to be aware of it today. If there's any weird movement, it's in the euro and it suddenly rockets to ADR for some reason, that's probably what's caused it. Canadian retail sales this afternoon. Might do something, might not. And then we've got Powell speaking at 1 o'clock. Again, Powell is not going to say much that wasn't said in FOMC on Wednesday. So I wouldn't expect any real impact off of that either. You might get a little bit of movement, but there's nothing really sustainable today. So there is no news today, basically. Thank God, because we've had the week from hell this week with news and unexpected news, mainly caused by the Swiss. So that's it really for news today. Hence there's only one live room this morning just to have a look at what the retail sales did, and they've had a negative impact on the pound, although it's a positive number. Overnight, nothing exciting. I've gone through the news this morning. There's nothing here really of any interest. We had the CPI figures coming out for Japan this morning. CPI has dropped. Hasn't really had, well, I say CPI has dropped. CPI has dropped 0.1 on forecast, but the core CPI, which is the main driver for inflation for most countries and interest rates, is at 2.8 as forecast. So it's not really any change, no news there. Other than that, we had Ueda speaking this morning and Suzuki. So this is the one that is important here. Japanese Finance Minister Suzuki, we are to continue to watch FX moves with a high sense of urgency. Yeah, so again, intervention talk. It's good because it gives me faith that if that US dollar yen does pop out of that breakout, the Japanese are going to turn around and screw everybody, which is fine. I just want to be short against the yen. I do not want to be buying the yen. Anybody buying the yen at the moment with them saying things like that hasn't looked at history. It comes down hard. So we'll wait and see. Obviously, the US dollar yen hasn't broken the all-time high. It's had 2 attempts, hasn't done it. So today, again, is another, I keep saying it, I've said it for a few days now, it's a key day today. So we had a run up into the all-time high we fell short. We pushed up yesterday, retested it. This morning we had another crack. We've fallen short. So another reversal alert got in. We had a reverse alert going there. They've just taken that high out literally by maybe 2 pips above the previous day's high, and then they sold it again. So it doesn't look like they want to run up at this, but if it does go above there today, we need to be watching the Japanese and what Suzuki says. So that's hence me reducing this exposure on the yen. I still want to be long, absolutely fine being long on the yen. I just don't want to be overly exposed on it, just in case. So that's your overnight news. Obviously, retail sales came out this morning for the pound, and that's about it. So nothing exciting to look at there. Pound CAD. Pound CAD, wouldn't it? Yeah. So yeah, coming down very nicely. I'm not in it at the moment. It's not a bad area to get in long, to be honest. So we're just coming down to test previous resistance, which turned into support, which is this weekly level, which is where we are now. So potentially we might find some buyers stepping in here and pushing back up into that propulsion gap. Obviously, we've got the big propulsion gap caused by the news here. So for me, it is extended. We did get below that 20 level yesterday. So there was a long opportunity yesterday. Why did I not get in that yesterday? Glad I didn't, but I'm not sure why I didn't. No signal. No signal yesterday. Pound CAD. That's interesting. So the signal came, well, it wasn't a signal. That's interesting. So the logic of the EA is for a signal long, for the candle to open below the signal line and close above the signal line. Yeah? What happened here was the candle opened below the signal line, closed below the signal line, then the next candle opened above the signal line and closed above the signal line. Nothing opened below and closed above, because it just so happens that there was a gap in the market. There's something that just doesn't happen normally. So that's why I'm not in the pound CAD long. Ordinarily, I would have been in the pound CAD long yesterday on that. Although that's not a great signal, is it? So that's why I'm not in the pound CAD. I just wanted to check the logic on that to make sure that something wasn't wrong. And that is exactly right. The EA is doing exactly what it should be doing. There was no signal. We didn't open below and close above. There you go. Sorry, I just needed to check that. So pound CAD, basically, obviously we've got a big drop going on at the moment. Good opportunity for getting in long. Although obviously the pound at the moment is getting hammered off the back of the retail. So what I would probably do today is see if we can get an ADR hit. If we can get an ADR hit today, I might get in long on this. I probably will get in long on this, actually. So this is a prime example of when you would use that lovely buy stop button and go ding, place an order in the market. And I will trail this order down. If it keeps going down, I will just keep trailing along with it and basically wait for the market to push back in my direction, and then I'll go long. So in long pound CAD. There we go. So what the EA is going to do now is on the 15-minute chart, it's going to trail on the 15-minute chart, basically. So every 15-minute candle, if it's pushing down, it will trail. If it pushes down, it will just continue trailing until market pushes back up in my direction. Then I'll be long. So long pound CAD. That gives me hedged exposure on the pound and hedged exposure on the, no, hang on, going long on the pound, which becomes short on the CAD. That overexposes me a little bit on the CAD. However, CAD yen, I will be getting out of at some point today, I suspect. Tell you what I'm going to do. I'm just going to cancel my break even on the euro yen because I want to reduce my yen exposure. So what I'm going to do is I'm going to reduce my yen exposure using the pound CAD instead, because what that does with that, the CAD yen. So what that does is with that pound CAD trade that I'm about to get into, I'm going to be reducing one of my Canadian dollar exposures if it rallies and replacing it with the pound CAD exposure. Right. So that is everything on that I've banked this morning. And a quick look at the pound CAD. Morning day trader. New Zealand CAD. Yeah, we'll look at that. I'm going to look at that one as part of the RSI. Pound Swiss back to where it was before the Swiss interest rate announcement yesterday. Yeah. So basically what's happened with the Swiss franc is weird line. So what's happened with the Swiss franc, obviously, after the rate announcement, I'm out of the Aussie Swiss, thankfully. We've returned to origin on a lot of these, well, not a lot of them, some of the moves. So Aussie Swiss, CAD Swiss is holding, Swiss yen, obviously the yen is powering up, so that's going to continue to come down. Euro Swiss has come down and retested the highs of the propulsion move. So again, remember I said if we do pull back, that's quite likely where we get the bounce from. Pound Swiss completely undone it, but that's because we had negative pound news yesterday and we had negative pound news this morning, or rather we had negative moves off of the news. Yeah. So with these interest rate decisions, remember I said this interest rate decision on the Swiss, yeah, it was unexpected, which is why we got a 300 ADR move off the back of it. But the market had been factoring it in for weeks as a potential. So the market being clever was like, just in case, let's get out of some of our Swissy. So there wasn't a massive amount of Swiss continuation movement. It was basically knee-jerk reaction, and obviously now they've undone it. But you know, it's a risk. That was a risky trade. If you took a short on it, it was a risky one, but it paid out. Euro US dollars ADR. So yeah, so a lot of these obviously are return to origin moves, but I suspect it will continue in that direction. The Swiss have reduced their interest rates unexpectedly, so you don't really want to be buying it. So US dollar Swiss running again today. I want to do some drawdown control on that. Bear with me a sec. Sorry, it's a bit hectic today. US dollar Swiss 3. Okay, so just doing some drawdown control on the US dollar Swiss because it's pushing again today. So just remove that position there. That'll do for the minute on that one. Just using some of my profit just to reduce the exposure on the US dollar Swiss a bit because it's not stopping at the moment. Still coming down. Yeah, so Swissy, difficult to tell what's going on with that at the moment, but I suspect we're just going to see continued weakness in the Swiss moving forward because they've reduced their interest rates. Yeah, so they're less attractive to put money into. So you put it elsewhere. So for the Swissy, obviously, if you are taking long positions, as I've got one on at the moment, but that's the US dollar Swiss, which I've been in for a while, you may find they take a little bit longer to play out, but it's just going to be normal market structure, I suspect. So there will be exit opportunities on it, but it's probably going to be weak for a while. Morning, Chucks. Right. So ADRs today. There's quite a few ADRs, as you can see. Weekly ranges, I mean, you can't really pay an awful lot of attention to the weekly ranges. It's Friday. Yes, they've hit their weekly ranges, but they're yen and Swiss based. The yen, we think, should be continuing to power up, so you don't really want to mean revert any of those that have hit the weeklies, which will be yen. And the Swiss franc, I'd be wary about trying to mean revert the Swiss franc at the moment. We have got one monthly there, Euro Swiss. Tell me about it. So yeah, Euro Swiss is obviously hit its monthly range. But it is, we're only like a week away from the end of the month. So again, I'd be wary about trying to mean revert that one as well. So your ADRs today, we've had a lot of movement on the Australian dollar this morning. There isn't any news that's caused this, but the market has basically just tanked off of the Asian session. So big, strong move down on all the Aussies this morning. Everything's starting to drop. So you've got ADR opportunities on all of these potentially today. So if we look at the Aussies, Aussie CAD coming down to a nice potential support level, 125 ADR. Got a backup coming down here, which is kind of a triple bottom, which is previous week's low and the week before's low. So this is a very good, strong support area. So if we do get a bounce, there's potential for a bounce out of this area here, or you could drop down into to get to 200 ADR is going to be a push, I think, but you never know, it could do. So big, strong push down on that one. Good opportunity for a long. I can't really take it. I'm exposed too much on it at the moment. So there is an opportunity for long there. Aussie dollar Swiss, that's come down. We've hit ADR. So this has got a little bit further to go. We've got a very good support level coming up down here. So, but again, this is probably a very good long opportunity, to be honest, because this is probably just the pullback on that move there. But not quite sure exactly why we've got so much sustained selling on the Aussie. There was news this morning from the RBA. I suspect it's something that the RBA said this morning that's obviously tanked it, but there's nothing red in there. There's nothing massively important that was said. So so that's just coming down at the moment. So good mean reversion opportunity to take along there. Aussie dollar yen, be careful with the yens. I wouldn't really want to be buying the yen at the moment. I do want to buy the yen. I don't want to buy against the yen. Euro odd. Again, Australian. So I got out the entry from yesterday, this morning in propulsion. So that was my target, the propulsion gap. So we're back in the propulsion gap. So you can look for a short back down into there. So if you drop down onto 5-minute time frame, you've just had the reversal alert there at 125. You would have had a reversal alert in there as well at 100. So it's pretty much exactly the same level, the break off of 125. So there's your M pattern reversal. There's a reversal alert. So look for a push back down. Watch this high here. So that propulsion area. And on the hourly, you get in now. Half an ADR is 39. So easy. There's that support that I just looked at. So you easily get half an ADR out of that to the downside. Euro US dollar, big extension to the downside. So US dollar powering up again today. Another strong day, well, another strong start from the US this morning. So very nice extension there on the Euro US. Again, coming down to a very good level of support on this one. So lovely previous support turned into resistance. Yeah, broke through it. Support, 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 support. This is a very key level, this, that they are buying and selling from. So if we can get a 125 ADR today on the Euro US dollar, I'll get in long on that. I like the look of that. Not quite, it's below the 30 on the RSI, so it's a decent extension. I'd like it a bit further, but obviously if we can get another quarter of an ADR out of it, I shall jump in long on that one. Again, with the position trader EA, this is the beauty of this EA. I love it. It just allows you to do this. So as we push down into that level, I'm going to stick a buy stop on. And then the EA will just, on the VPS, will just take over and trail that buy stop until the buyers enter and pop, I'll be in. So Euro US dollar, I want to see a little bit further. I'd like to come down and test this level. And there's going to be limit orders here. We know there's limit orders there because they bought it, they bought it, they bought it. Yeah, they're buying this level. So we'll be out of there. We'll be in that when we get a little bit further. So 125 ADR on the Euro US dollar, if we can get there. Pound odd also extended on ADR. You've missed that one. That's my long that I exited in the middle of the propulsion. You've missed it. It's already gone. So your entry would have been not a very good entry. Just actually, that was a really strong push there. So you wouldn't have. This is again, you know, talking. People keep asking me what's the difference between the position trader EA and the market reversal alerts EA. This is a market reversal alert. You've just had a signal now. A moving average entry would have been here. Yeah, that's the difference. Yeah, you're just going to get in tighter and faster using a moving average entry than you will with market structure, because official market structure broke with there. But you missed all of that move. And if you actually measure how much of the move you missed from that high down to where the reverse alert was, it was 54 pips. It's half an ADR. Yeah, so it just allows you to get in quicker. Doesn't always mean that's the right thing to do, because what it could have done was got you in and then carried on with market structure up, couldn't it? In which case that's not the right one to take. That's the right one to take. But every time one of those is going to be right, one of those is going to be wrong. Sometimes they'll both be right. Sometimes they'll both be wrong. Doesn't matter how you get in, does it? So pound odd. Pound yen extended to the downside. Wouldn't want to take that. I'm out of the pound yen shorts. Yeah, it may well pull back on it. But with the pound news this morning driving this down, with the retail figures, the market not liking the retail figures, and with the potential for that yen to power up now, we've started that move and we've hit that level and we've rejected it twice on the US dollar yen. I'd much rather be short on it rather than long. But it could well just mean revert back up. If it's going to continue in market structure, there's your M pattern. Yeah, if we're going to continue market structure, we are going to pull back before we push down. So I'll be looking for that propulsion gap as an exit, which is basically ADR to the upside. So your reverse alert would go in there. You're going to get 92 pips out of that, which is well over half an ADR. Half an ADR is 70. So plenty of room for a pullback before it puts a new leg in, if we can get some strength in the pound, which it doesn't seem to have this morning. Pound yen, covered that one. Pound US dollar, coming down hard. US dollar's running at the moment. Obviously, the pound not had a good reaction to the interest rates yesterday, not had a good reaction to retail today. Let's just see where we're headed with this. So we've broken down through the 2-week support. Monthly low down here. We'll probably find there's limit orders that trigger down there, which is 200 ADR. We've got this propulsion move, which we've tested once, but this propulsion gap here, although it did hold and they did add in on that leg, is kind of, it's not really an accumulation break, which is the type that I like to see, that sort of move, bang. Yeah, this is more of just a normal market structure move, just with a big order in it. So it is extended though, 125 ADR. We've been coming down now for 2 days. So yesterday, we put in 200 ADR. So far today, we've put 125. Yeah, so 325 ADR in 2 days. Well, in a day and a half, really. So this is really extended, really stretched. At some point, they're going to get out of a portion of that trade. All depends on whether or not this US dollar weakens this morning after this initial flurry that we've had coming in. So, yeah, lovely mean reversion opportunity on the pound US dollar. New Zealand dollar yen. Again, same thing. I'm out of the shorts. Not really interested in longing it. If you want to long it though, We've got a nice level of support coming up here at 225 ADR, which I suspect we'll get a bounce out of. If we don't get a bounce from here, back up into here and do that, we will probably do that. Then obviously continue in its merry way. So there's an opportunity for longs on New Zealand dollar yen and New Zealand dollar US dollar. Again, big strong push on this one. We're out of support here. So this area where we stalled out, we came down and we hit that multiple times. Yeah. Kind of a weak sort of support area. But other than that, all the way down. But I mean, there's no real reason for it to do that because the New Zealand dollar shouldn't be this weak and the US dollar shouldn't really be this strong. So this is just a big move going in, which will probably mean revert at some point. So opportunity for a long on this one as well. But at the moment, the US dollar is not stalling at all. So just wait for some weakness in the US. Wait for buyers to step in and then potential to jump in long on New Zealand dollar, US dollar as well. So those are your ADRs. Obviously, the weeklies we know has been an utterly lunatic week. Next week, we've got absolutely nothing. Next week is like, it's chalk and cheese, isn't it? Like, absolute crazy week of news. Unexpected news, high impact news, just everything, every day, total craziness. Next week, we've got CAD GDP and the Aussie CPI. That's it. But that's it. We got CAD GDP and the Aussie CPI. That's it. Literally, there's nothing else happening next week. So next week's going to be utter chaos into fall asleep mode, I think. But anyway, so those are your ADRs today. We've got some RSIs to look at as well. Dallas, I only sell the Oz. Okay, fine. I only buy it. Morning, Peter. I have slept over yesterday's disaster, and today is another day. Yes, it is. Correct. Morning, Jan. So, RSIs today. There's only one decent one to look at, which is the pound US dollar, which is extended on. We're down at the basically at the pretty much the 80-20 level. So I will be getting in to this one today, as I've already said. We've already looked at this because it's an ADR hit, but good looking level for a long, either from there or from there. So you got two opportunities, two options really. We haven't had a pullback on that entire move. So this whole move that we've had, which is 350% of its normal ADR, we haven't had really a pullback at all on that. So they're going to want to take profit on a percentage of that move because it's not all going to be speculative. Some of it will be commercial, so they'll be pulling back on some of it. If they don't pull back from here, where we are kind of about now, they will pull back when we get down to the monthly levels because there'll be limit orders to trigger and it will automatically just turn around when that happens down there. So it's how far it pulls back, which is obviously the bit that we're interested in. It's how much money we can make out of that leg. So if you get in here and it doesn't work out, there's a second entry there, which is an ADR away. So you will definitely have two positions on by the time we get down to that point. Your average will be there, and you've got all of that distance basically to make profit. So there's plenty of room to make money on the pound US. It's just whether or not it continues down today. So again, pending order above the high, nice opportunity to get in long. So that's your only big RSI extension today. New Zealand dollar CAD is extended on. I'm not going to look at all these other ones because these are all going to be ADRs we've already pretty much looked at anyway, the other RSI extensions. New Zealand dollar CAD extended on the 4 hour. Just about. I was going to say, oh, that's the hourly. What? All right. So yeah, New Zealand dollar CAD extended on the 4 hour. We're approaching the 20 level again. So we're embedded. We've been embedded obviously all week on this one. Big strong push and extension. We're down at this previous the monthly low. We've got the previous month's low, which held up, and we got the limit. This is what I mean by limit order bounce. Yeah, so that's a limit order bounce. Basically, is where the previous monthly low was. They have orders ready to trigger at that level, so they buy it. It's whether or not you can get enough move out of it to make money. So again, here we've got a limit order bounce, which has already happened this morning. So we hit this level, bounced off of it, but been overwhelmed by sellers this morning. US dollar massively strong today, powers up the Canadian dollar, so the Canadian dollar is pushing back against New Zealand. Aussie dollar's been dropping this morning. New Zealand moves with the Aussie dollar. So we've had weakness in the Aussie, which gives the New Zealand weakness. We've had strength in the US, which gives the Canadian strength. So New Zealand CAD obviously moves faster in one direction. But it's a really good support level. So it's this news, this propulsion move that we had, which we've bought multiple times, and we are now back in this area. So good opportunity for a long. I've got 3 on this at the moment, and I'm looking for a push back up into there. I won't be going that high with my TP. You know, I'm about an ADR, 125 ADR away from average on it. So yeah, good looking opportunity for long from where we are, but I'm already in it. So failing that, if this doesn't hold, be looking for a push down somewhere into that area there, which is about 200 ADR. So my next entry is going on there. Basically just looking for a pullback on this leg at the minute. So just not really having much of a pullback because of the amount of news that we've had this week. So yeah, looking good for longs. New Zealand dollar CAD, that's extended on the 4 hour. We've got Euro Swiss already. We know about Euro Swiss. Massive extension on the 4 hour. Biggest extension we've ever pretty much had on it, 90. We don't get up here. This is the first time we've been here off the back of that news. You know, it's unprecedented event. A squeeze into an interest rate drop that wasn't expected. Just utter lunacy, but straight up into that previous propulsion gap, which is filled, which is really old and not really viable anymore. But so I think there's an opportunity potentially for a pushback down into the origin of the move. We're going to need some weakness on the euro or some strength in the Swissy, but I don't think that's coming from anywhere at the moment. So it would need some weakness on the euro to get it down there. Other than that, I think we'll probably hover about for a bit and gradually try and just grind up with it. The fundamentals have shifted. The euro's not dropping until June. The Swiss have already dropped. There's absolutely no reason for that to happen. So unless we have a war or something else kicks off where we suddenly need to put our money into safe haven, which means the Swiss franc will suddenly power up and you'll be back down here again. But failing that, not a great short opportunity, that one. And CAD Swiss, same story. Loads of strength on the CAD and the US at the moment. And obviously the Swiss franc having a nightmare. So again, not the best opportunity for shorts on that one. And that is extended on the 4 hour. But, you know, it's whether or not this Swiss franc just flags and breaks, or whether we get that pullback return to origin before we go. If it, I mean, you can see on this chart specifically, it's clear air from where we are when we broke out here. We had that little area of resistance there, which is just got blown straight through with the news. There's nothing, absolutely nothing but clear air until we get all the way back up to that high from September. So it's no reason for it to stop at all, barring bad news for the Canadian dollar or the US dollar or something that drives that Swiss franc again. So not a great opportunity for a short, I don't think, on that one either. Apart from that, we've got a couple of other 4 hour RSI extensions, but nothing particularly extended. So So those are your RSIs and ADRs. Good couple of days, payday basically, on this account anyway, this week, which is good. I've still got problems with the US dollar Swiss. Just scaled out of some of that this morning. Obviously, the Swiss franc and the US dollar going completely the opposite direction to what I want it to do at the moment. And the Aussie dollar, New Zealand dollar, which is starting to roll over. So I've got this issue with a little bit too much size on this one. So I'm taking that position off if we break the high today, which hopefully we won't because it's 125 ADR. This position here is too big because it shouldn't be that large this quick. It's because of this cock up I made, basically taking a manual with an automated position. So I'm going to be removing that one at break even if it pushes up today, and I will be removing one of those if it breaks the high today, just to scale out of some of this because I've got too much size on it. It's my mistake. But yeah, so there we go. That is today's stuff. How are the reversal alerts and ADR levels showing if you are using the position trader EA? They're indicators, Senji, aren't they? Indicators. Yeah, support, resistance, propulsion, ADR reversal indicator, market reversal alerts. Just indicators on a chart. That's all I've got for you today. There's nothing else to talk about, really. It's just business as usual, and seeing what happens with the Swiss. So we've got two main focuses at the moment, the yen and the Swiss. CAD yen pushing up a little bit more again. A little bit of slight weakness on the yen. Ever so slight, but yeah, so I mean, it's just a case of seeing what happens with those two over the next week or so, really. We need confirmation that the yen is going to continue to strengthen, and we need to figure out what the hell the market's going to do with the Swiss franc now. They've gone ahead of the US. So, again, difficult to find words, isn't it, for the Swiss? Not the first time they've done it. In fact, for me, it's the fifth time they've done it. It was always a possibility, and it was. So what do you do with the Swiss? Apart from take it out of your portfolio and go, I'm not trading you anymore because you're erratic and you don't do as you're told. What can you do? But yeah, so going to be watching that over the next couple of weeks and see what happens with it. But I'm still going to trade it at the moment. I had a good think about it yesterday. I looked at my P&L and I make decent money out of the Swiss franc. So I'm going to continue to trade it for the moment, but I am going to limit my exposure on the Swissy a lot, and also on the yen. So I'm long on pound CAD. So that trade's just triggered on the pound CAD. First long position. Target up into propulsion. That's a little bit keen, but we'll see. See where we go. But that's a nice potential level, that pound CAD. If it doesn't work out, I'll be adding in on the way down. Right, so that's it for today for me. Next week, we've got nothing on Monday. It's new home sales for the US. We've got consumer confidence on Tuesday. Aussie CPI Wednesday, which is the first main news event of the week and probably the only news event of the week. We've got CAD GDP and unemployment on Thursday. And we've got pending home sales and the revised DOM, which doesn't really do an awful lot. And then we've got PCE on Friday. So there's very, very little next week. So next week, I suspect with live rooms, what I will do is alternate. So I'll probably do an 8 a.m. on Monday so we can do an analysis of everything, go through the news for the week, go through every pair, see where everything is, see where everything's heading, see where everything's likely to go. Tuesday, I'll probably do an afternoon session and have a look at what's going on Tuesday afternoon with the consumer confidence figure. Wednesday, 8 o'clock again for CPI. So we can just analyze what happened with the Aussie CPI numbers. And then an afternoon session on Thursday to look at CAD GDP. And then probably back to Monday. Oh, no, not here Friday. Bank holiday. So we're not in Friday. So there's no live room Friday. So yeah, so probably do an AM, a PM, an AM, and a PM next week. Just be 4 streams next week. Because there's not really much point in doing 2 streams because the difference between the morning and the afternoon, not going to be a lot. Nothing's really going to move particularly, I don't think. DAX, oh, nice breaks this morning. Look at that. Stock Index Hedge, EA, nice breaks this morning. 3R, just shy of 5R on DAX, on the FTSE. 2R on the DAX, clean breaks. Nice. I'll take that. So there we go. I'll be in the live room. No, live room. I'll be in the Discord group and Telegram if you need anything. And basically, we'll just be doing research today. So anything you need, let me know. I will be around. Other than that, I'll be back on Monday. And if you need anything, let me know. Have a good weekend. And question about the PTEA. Okay. Quickly, Steve, because I'm going. No, honestly, carry on. Ask a question. And then I'll go. Unless anybody's got anything else I want to discuss. I'm just kind of stalling, really, because all we're doing is trading the fallout from yesterday, so that's okay. Ask away. In the settings, if I change the ADR and RSI to false, does this mean I just use the buttons to get in and then manage? Yeah. So if you have these set to false, so this is auto trading, auto strategy entry. Yeah. If they're set to false, it just won't get in. But if there is an existing trade running, it will still manage it using drawdown control, exit targets, adding to trades, etc. It just won't take an initial entry. If you have this button trading only set to true, none of this works. Nothing. Yeah. So what I have, the idea behind this is on my VPS, I'll show you my exact setup. Look, this is my VPS. On the VPS, the settings are button trading only false. In this case, RSI is set to true. So what will happen is the EA on the VPS will automatically take an RSI entry. And it will take it with that risk. It will scale in. It will exit. It will do drawdown control. If I had aggressive drawdown control set to true, it would do that as well. So just normal EA functionality. Yeah. So that's what it's going to do on the VPS. On my terminal here that I trade with in the live room and on my computer here, it is set to button trading only mode. Because what you don't want, I do not want it to add additional trades on this terminal and add additional trades on the VPS. Exiting wouldn't be a problem. I don't want it to do drawdown control here and on the VPS because it's just doubling everything up. So what this does is it basically means on my terminal, what I can do is sit here and if I fancy, like exactly what I did this morning, pound CAD, I fancy the pound CAD. I'm going to put a buy stop on. So push down. Yeah, and then it pushed back up again, and now I'm in, right? So what's happened now on the VPS, on the pound CAD, is the VPS is now taken over for me. So it's going, next long is there. If it pushes down below there, I'm going to get you into a new trade. I'm going to do drawdown control for you. I'm going to manage the position. If it pushes up now, half an ADR, I'm going to get you out. It's doing everything for me on the VPS. On here, not doing any of that. because button trading only disables all other functionality. None of that works. None of it. But these do. I want to close out my trades. And if I want to, yeah, I can take additionals. So the EA is going to be managing it. Yeah. The EA on the VPS is going to take the next long trade when it goes below that level and we get a signal. But if we push down and it does that, I might go, do you know what? I fancy that. Let's say there's a support here and we've double bottomed on that support. I might go, I fancy that, and I'll hit the buy button. What will happen is when I hit the buy button here on the VPS, the EA will go, he's just taken another trade. Right, scrap that. Next long position's down here. Yeah, so the whole purpose of the button trading mode and the buttons is the buttons are for you to either, as I've just done here, kickstart a trade because I fancy it. Forget this, forget ADR. I just fancy going long. Flip the coin, the dog's puked in the corner. Yeah, I want to go long because the dog's puke had sweet corn in it. If it had carrot, I'd have gone short. Sorry if you're eating your breakfasts. It doesn't matter, does it? But what the EA is doing on the VPS now is going, right, let's position trade this thing. If it goes up, we'll get him out. If it goes down, we'll get him in. Yeah. Or for me to go, that's not quite going to get to where I want it to, I'm going to hit the button again. That's literally it, yeah. So that's the purpose of the button trading only mode. If you have this set to true, yeah, what will happen is let me just switch. There you go. So it will show the ADR trigger and the RSI trigger down there. Yeah. And it will draw on the chart. Well, it won't in this case because I've got a trade on. But it will draw on the chart the ADR triggers. So it will draw ADR on the chart for you. But if it gets down to here, it won't take a trade because we've got button trading only set to true. But it will draw in the RSI level and the ADR level. Yeah. But it won't work. Won't take a trade because we're in button trading only mode. I've made it as clear as I can, this button. I know it is still a little bit confusing, and I do get it because I know how it's programmed. I know the logic, exactly what it's doing behind the scenes. But that's why I called it button trading only mode, disables everything below. So it doesn't matter what you do. You can play around with these inputs to your heart's content. You can muck about with it. You can make it true. You can make it false. You can change stuff. Disables all other functionality below, i.e. nothing but buttons. That's it. Just buttons. Literally, it turns a very clever EA into a dumb idiot that is buttons. Turns it into buttons. Turns it into the button EA. Doesn't matter what you do with those. It won't take a trade. It will draw those on there, though. There you go. It is still a bit confusing, but I couldn't make it any less. It's about as simple as I can make it, I think. Can SIH be used? Sorry, I missed yours, AZ. How did yesterday's madness impact H1 mean reversion? Made 4.5%. Brilliant. So yeah, all good. Done 385 today. Payday yesterday. Payday on this account. Carnage on the other. Can SIH be used as a hedge of a 5-minute open candle instead of pre-market? Yes. Change the times. What will happen if you click on the sell stop button, but the EA on the VPS got a sell signal before the price hit the sell stop? Nothing. Don't know. Not sure why you'd do it. I have no idea. Test it. Do the magic numbers on the VPS and the manual button instance on the EA have to be the same? Yes, Sagar. What does it say? Come on. Magic number. Leave default unless multiple pairs on one terminal. 999. Doesn't use magic numbers. No need for them. Forget it. Just use it. It's all clever. It just reads the it's all explained in the manual. It just reads this. Well, it doesn't read that. It reads that. Obviously, if you haven't got that, you can't read it. But it just reads the pair, basically. More likes, guys. Come on, the 77 people. How many likes have we got? How many thumbs? I'm not even going to look, but we need more. We always need more. What I mean is, if you use the button trade and button trading only is turned off, does it follow the rest of the rules? Yeah. So if you have this button trading only turned off, the buttons still work. Of course they do. Yeah. It's not button trading only. This is button trading only, right? If you have that set to false, it doesn't turn off the buttons. The buttons are still there, look. They still work. But it will do auto trading. So if you had that set to false, and that set to false, and that set to false, it's not going to do anything, is it? Because it can't take an automated trade on ADR or RSI, and there's no trades, yeah? I think I understand your question. If you have it turned to off, it will follow all the other rules, yes, basically. But you won't. This is like. This is what I mean. This is why this is here. If you're using a terminal and you want to use buttons, you need that turned to true. If you're using a VPS, if you're not using a VPS and you're only using one terminal, you'd have that off. But how the hell is it going to work? Because every time you flick to a chart, it can't do anything, can it? Because it's not running on that chart. Got to have it running on a VPS. All EAs have got to run on a VPS. Otherwise, they're not running, are they? It's like, I've had this question before from people. And I have to ask the question, do you think you're in the right job? If I don't have the EA running on my computer and it's turned off, will it still take a trade? If you turn off the light, does the light bulb stay on? Some people, seriously. I've been asked that question more than once as well. Will the EA work if my computer's turned off? Can you use Windows when computer's turned off? No. Do you think that the software running on Windows would work when the computer's turned off? No. Did you really need to ask me that question? No. Some of the human race just so challenged that, I'm not going to say anymore. I'm going to dig myself into a hole. I'm not having a go at you, Chris, by the way. That was nothing to do with you. But it's quite difficult to understand. The reason I made this bit was because I want to use this EA here to take manual trades. That's the whole point of it, is taking manual trades, is turning any strategy in the world into a position trading strategy. You just use these buttons. So if you've got Bollinger Bands on your chart and you've gone outside the Bollinger Band and it's moving inside the Bollinger Band, my strategy says I should go long, and you go buy on your terminal. Then on your VPS, it goes, trade taken, guys. Let's manage it for him. That's the idea behind it. So with H1 mean reversion, killing it this week. What made you want to reduce exposure on that account? So I don't get overexposed. Go watch the Bootcamp AZ. You know what exposure is. If you're overexposed and it goes the wrong way, you get hurt. I'm just going back to what I've done for 4 years and is working absolutely fine, which is not overexposing myself too much. That's all. Like, basically, the difference between the exposure that I was running in the past and I started running was my normal exposure is that has been for 4 years. I've been running 0.5% risk over an ADR. Yeah, 0.25% over half an ADR. That's what the EA was set to do. That's what the default set files were set to do. That's how I've always operated. Limiting exposure to two trades per instrument. What I did was reduce exposure by half and take all instruments. Reduce risk by half and expose to all instruments, which is fine as well, but a lot more risky. That's all I've done. It's reverted back to the boot camp, basically. The good old days where it all worked and we didn't have Swiss franc killing us. How are you going forward to the strategies being? How are you going forward on the strategies being traded? Yeah, only H1M15 and SIH. Yeah, no ADR hedge. No, never was FTNet. Literally, I only started trading all 3 strategies in January. I've been telling people for 4 years not to trade more than one strategy. I've been telling people till I'm blue in the face. Pick one. You are either going to... The bootcamp gives you 4 strategies. Yeah, pick one. No one ever said, I have never said, trade all 4 strategies. Ever. Because they duplicate. You're going to get the same entries. Look at today. You got ADR hits on all the Aussie pairs. You got RSI hits on the Aussie pairs. Look at the New Zealand pairs have all got hits on RSI. New Zealand pairs have got hits on ADR. You're going to take an entry, both strategies. You're doubling your exposure. You're doubling your risk. The only reason I started doing it in January was because we had such an amazing result last year running on full automation on those strategies. So I thought, screw it, let's stick a bit of cash into them. But I didn't run them properly, did I? They were doing drawdown control. I wasn't. So it's nothing wrong with the strategies. I'm just, I can't run the live room, manage development and support of the products, trade, and do 3 accounts as well. I just can't do it all. I haven't got enough brain power to do it all. So I'm just not going to do them. But I wouldn't never recommend you run more than one strategy. You don't need to. If you are a position trader, you are taking the whole concept. I think this is where people are missing stuff. The concept of position trading is my position is short on the Canadian dollar. That's my position on the CAD at the moment. My position on the yen is long. Yeah. Why would I take another long on the yen? I'm already long on it. I can't make it go up more because I take more. If I take more, I'm just putting more risk onto the yen. Yeah. So if you trade H1M5, ADR, and Hedge, what are you doing? Trebling your risk. If you're going to run them on separate accounts, that's fine. But be aware, if the yen moves for 6 months in one direction and you've got it wrong on all 3 accounts. All of that is going to be at risk. Yeah, so nothing's changed. I've been doing this for years on YouTube in the same way. January this year, I changed the way that I worked. It doesn't work. Too much. Can you only use magic number if you have entered a trade manually without using the EA buttons and allow the EA to manage those trades? No. If you take a trade manually, it has magic number 0 and it can't be managed by an EA. The light does stay on when you turn it off. No, it doesn't, Harold. You are, of course, right, but a lot of successful traders would like to move to EA but have no idea what they are doing. A lot of successful traders would like to move to EA but have no idea what they are doing. That doesn't make sense. If you are a successful trader, you know what you're doing, don't you? Oh, what you mean? Automate their strategies, you mean? Yeah. But if you're a successful trader, why do you need to automate what you're doing? You're successful. If you want to automate what you're doing, get an EA built to automate your strategy. But if you're a successful trader, you're not using the same entry and exit every time. You are using discretion, and discretion cannot be automated. This is the problem with automation, yeah? So any strategy you ever find that you trade personally and you have success with, as soon as you automate it, it will fail. Yeah. The reason being is that you don't realize how much discretion is involved in your strategy. Yeah. A strategy is a set of conditions that are met, where you have usually a condition and a signal. Yeah. So the condition is this, the signal is that, the entry is this, the stop is discretionary, the take profit is discretionary. Because every time a trade is taken, this will be different and this will be different based on what you see on the structure of the chart in the past. As soon as you automate it and you say it has to use X and it has to use Y, the discretionary part that makes the strategy profitable and makes you profitable goes out the window, which is why people get really good at trading manual trading strategies and then automate them and fail. Which is why I have always told everybody to do it the opposite way. Use the EA to automate the monotonous, boring crap that you do every day, like monitoring RSI, monitoring ADR, taking trades, managing trades, adding to trades, taking profit while you're asleep, all the stuff that you can't do or that is monotonous and boring to do. Get it to do that. At the end of the day, today's profit has not been achieved by the EA. Today's profit for me has been achieved by me pressing this button with my finger and taking that off the table. The strategy was automated. The position scaling was automated. The lot size calculation was automated. My targets were set by me. My close was done by my finger. This bit is what the EAs are for automating. And this is what this EA allows you to do. If you've got a strategy that works and you want to turn it into a position trading strategy, first of all, if you've got a strategy that works, why do you want to turn it into a position trading strategy? It works, right? Maybe you can find an edge that makes it more profitable as a position trading strategy. That's fine. But that's what automation is for. It's not for replacing you. You can't replace you. If you're successful, you're successful. Give 10 people the same Bollinger Band strategy and come back in a month, you've got 10 totally different P&Ls. Yeah. Strategies do not get the same results with different people. Give 10 banks an algo that makes money, it will give the same result because the algo is what's doing it. You get one bank that changes one parameter in the algo, you get a different result. Discretion. Yeah. So that's what EAs is to be used for. But if you've got a successful strategy, Wayne, and you want to move it to an EA, be aware that you're not going to get the same results. But think of the stuff that you do every single day that doesn't require you to think about it. Yeah. So I like to get in when price has gone outside of a Bollinger Band and it's come back inside of a Bollinger Band. That can be automated. I like to put my stop at the high, 10 pips above the high of the last peak before it closes below the Bollinger Band. That can be automated. I like to get out when I've got enough money to pay the mortgage. That can't be automated. Because you will see stuff happening and go, that doesn't look like it's going to get to my target. I'm going to close it. That's you. This can be automated. This can be automated. Yes, you can automate setting a TP in the market. Whether it hits that TP or not will depend on you and what you see on the chart, won't it? That's where your skill comes in, your experience comes in. Discretion. But automate as much as you can. Yeah. I used to come, before I built the dashboards for RSI and ADR, my job was every morning literally to come in and go, Aussie CAD, no, hasn't hit it. Aussie Swiss, no, hasn't hit it. Aussie Yen, no. Aussie New Zealand, no. All right, set the alarm for 1 hour. Aussie CAD hasn't hit it. Yeah, that was my job, which is why I switched to 4 hour, because then I only had to do it every 4 hours instead of every hour. Then I built the dashboard, and basically I sat here watching TV, mucking about, playing games, and it would go ping. Ah, Aussie Yen's hit it. Long. Yeah. So this cut my analysis time from once an hour, once every 4 hours, down to none if it didn't move. If we didn't have an RSI for a week, I wouldn't do anything. Automation. What does it do? It stops me getting bored and pressing buttons because it will tell me when to take a trade. Yeah. So then I thought, well, rather than having that, why don't we automate that process? So I know I want to get in when the RSI is extended, and I want to get in when the market's moving back up again. So if I build an EA that monitors that, and when it sees this happen, does this, bang. First EA I built, literally just bought and sold. Didn't use a stop loss, didn't use a TP. All it did was get me into the market. And then it evolved from there. But then it gets you into the realm of back testing. And then you suddenly find all the problems with your strategy. But those problems wouldn't exist when you're doing it manually because you would have made different decisions. Yeah. So it helps you develop your strategy as well, automation. But it's just the monotonous stuff. That's what you get rid of. Then all the crap. Aussie Swiss. Yeah. Got out because of that. Was expecting it to get to there. And it may well still do. But that was enough money for me this morning. Yeah. And I wanted to reduce my Swiss exposure. Get out of the Swiss, basically. Morning, Brian. That was again an eye-opener. Need to adapt to your saying now. Need to adapt on your saying. Yeah. Light bulb stays in the fixture when you turn the light switch off. Yes. Doesn't stay on though, does it, Harold? Do you think US 30 will come down at all? I'm stuck in a hedge. No idea. Yes, it will come down. No idea on that. Yeah, I mean, so this propulsion gap, which is the breakout of the recent highs, you got a triple top breakout propulsion gap there. 125 ADR. I suspect. Same as that. Look. That's what I would be looking at on it. But I mean, the trouble with, you know, you're at all-time highs now. God, there's no data on this, is there? You're at all-time highs, so trying to pick a turning point, impossible. All you can do is go with market structure when it breaks short and hope this is the time. If it's not, either re-hedge it or I don't know. I don't trade long-term indices, intraday only on indices, or buy only. Indices are a buy only instrument. Talking more about understanding how to set up EA trading and managing rather than the strategies. Well, EA, oh right, so setting up an EA, I've done a video on it. Well, I did a video on how to set up the position trader EA. Only a quickie, like quick VPS setup. So I just explained how to set it up on the VPS. Very simple. We just set it up. All a VPS is a computer. My VPS is sitting next to me. It's a box. It's just a PC. And all it is a Windows PC with MetaTrader installed on it. And I've opened up every chart and stuck the EA on. And the EA's job is literally sit there on every chart and monitor the market. And when the market is at a condition I've decided and you see a signal, get me in. And that's it. I am trading by managing my portfolio and watching what's going on and analyzing the market. And if I decide I do not want to be going long on yen pairs, I will open up my VPS, go to all the yen pairs, and basically say, I want to go short only. Yeah, and that will basically, I am making the decision for the EA. You're not going to take any long trades for me. You're going to take short trades for me. Yeah. So, but all you're doing basically is it's just a MetaTrader set up running 24/7, isn't it? That's literally all it is. At the end of the day, it's a computer running your terminal with the EA on, and the EA is programmed to do a specific thing. But it is an automation tool that I manually manage the trades of. It will scale me in as I want it to scale me in, but I will decide when I get out. I mean, it does do automatic drawdown control for me, but only if I'm asleep. Yeah, I've just done DD control this morning on the US dollar Swiss. I could have let the EA do it, but I wanted to do it at completely the wrong point because that's coming back down again. That's usually when you do go out. As soon as you get out, it goes the other way, isn't it? That's what happens in trading. Morning, Mark. FX will come down. It will. Oh, sorry. It will come down. Then it will go back up. Yeah. I wouldn't ever be a seller of indices at the moment. Not with what we've just had with the bear market in 2023. We're not going to get another one of those for a while. So bear volatile markets don't come along that often. Every 4 to 8 years, maybe you'll get a strong bear volatile market, but the market is bull. That's what it is. The stock market makes money. Things that make money go up. They don't go down. I've explained it before how stock indices work. Yeah, they are manufactured to go up. That is their job. If I had data, that is what they do. They just go up. And it will continue to do that. You go and look at the S&P or the Dow or any historical index, and look at the prices it was trading at every decade. Yeah. So this is the S&P 500. It was trading, I don't know what the price it was trading at was, but the price it was trading at, there's 2000, yeah. So in 2014, we were trading at 2000. We're now trading at 5,000, whatever it is. Yeah, 5,241. Yeah. So that's happened in a decade. In another decade, we'll be trading at somewhere in the region of 7,000 to 8,000. In 20 years' time, we'll be trading at somewhere in the region of 10,000 to 12,000. Because the companies in this index, these 500 stocks, their job is to increase the price and value of the company and please the shareholders to make the shareholders money, which means that by default, they have to increase or sustain their business. If a business starts to fail, stockholders and shareholders will jump ship, the price of the company will come down, and either then the board will be replaced, the structure of the company will be changed, or the vision and direction of the company will be changed to make it profitable and make it go up again, or it will continue to drop until it gets to the point where it drops out the bottom of the S&P 500 and is replaced with another company that is doing that. The companies in here only do that. Therefore, this will only ever do that. The price of this will continue to exponentially rise forever, for eternity, because businesses will continue to constantly make money. They are up-only things. All they do, they increase in price. It's a bit like Bitcoin, yeah? But then every now and again, you get a catastrophic collapse. COVID, bear market, financial crashes. You get the odd blip where it all goes really, really wrong, but it always will recover at a much bigger, faster rate, because the companies in this 100 index that did not survive were replaced by companies that were doing well. So let's say 20 of that 100 go bust. What happens? They get replaced by 20 that didn't go bust, or 20 new companies who are rising in price. Always goes up. So what does Warren Buffett do? Every time the market drops, he buys it. If it drops further, he buys it. If it drops further, he buys it. Why? Because these guys that are actually losing money are soon going to be replaced by what? People that aren't. This is where the term buy the dip comes from. Buy the dip in the stock market, because the stock markets only go up. FX markets, on the other hand, totally different ball game, because the value, if you like, in two currencies changes with their economies. So if the US dollar is doing really badly and they have to drop interest rates to encourage growth, you don't want to put your money in the US dollar, so it weakens. And then all of a sudden the Swiss franc will go massively strong and you'll get a huge move in the US dollar Swiss down. And then the Swiss franc will drop and it will go sideways for a while the US dollar is weak and the Swiss franc is weak. Then the US dollar will suddenly increase its interest rates and become powerful while the Swiss doesn't do anything, and it will grind up. There's two things at play, which is why you get a lot more up and down movement, and why so many people trade the Forex markets, because you've got huge volatility and constant bi-directional movement. If stuff goes up and down all the time, there's always an opportunity to make money. If stuff's going up, expected to go up, and it's coming down, there's only one thing you can do with it. It's a lot harder to make money out of the stock indexes, and a lot longer. It's an investment vehicle, isn't it? Buy the dip, sell the tip. Exactly. Trouble is, where is the dip and where is the tip? And this is why everybody loses money, because they go, I think this is the dip. I'll put a stop loss there. And if it isn't the dip, I'll give the money away. I'll get in here because I think this is the dip. I'll put a stop loss there. And if I'm wrong, I'll give the money away. There's only a certain amount of times you can get it wrong before you go bust. Yeah. If you reduced your risk by 50%, 80%, however many percent you needed to, and just kept buying it like Warren Buffett does, you will be right. Guaranteed. Position trading. Or, as Bloomberg put it, DCAing. Same thing. Yeah. All the investment houses out there, all the pension funds, all the hedge funds, all the central banks. That's exactly what they do. You watch Bloomberg. If you haven't watched Bloomberg, the end of day wrap on Bloomberg, watch it. It will give you so much more faith in position trading. You will hear, they interview basically hedge fund managers, pension fund managers, investment house managers. They're always interviewing people like that. And they will say, so what's your thoughts on that? And they'll say, well, we're currently positioned long. What they mean is they've been buying it. Yeah. They haven't bought it, got stopped out, bought it, got stopped out, bought it, got stopped out. Their position's long on it. They're buying it constantly. Yeah. Doing that thing that everyone tells you not to do. Never add to a losing trade. Why? It's what the banks and institutions have been doing for centuries. And they're not going to stop doing it, because that's how you make money in the markets. Because you don't know when it's going up. You don't know when it's going down. You don't know where it's going from. But it will, because it's what it does. And it has done for decades. Go and look at any chart, scroll out, All you've got to do is survive the wrong. Yeah. That's all your job is surviving the wrong. And the only way you can do that is by using low risk. That's where, as I say, everybody goes wrong. That's what happened yesterday with the Swiss franc. That's why the Swiss franc went wrong yesterday, because of the squeeze and pop, basically, this unexpected move. But unprecedented times, unprecedented situations. That's when you take your losses. Somebody asked me in Telegram yesterday, how are you going to handle the loss on the hedging account? Like, well, I lost. There's no way to handle it, is it? It's a loss. I've been successfully trading profitably for 4 years. I had a blip, made a loss. No difference to me losing 20k in a day than it is to me making 20k a month for 4 years. It's a loss. Think of it like a stop loss. My equity curve is this over the last 4 years. That was yesterday. It's just a stop loss, isn't it? Really, when you think about it, it's a blip. Happens. Black swans happen every decade or so. You'll get a black swan event. Nothing you can do about it. One of those things. Things to explain about euro yen. Well, the euro is the currency used by the European Union. The yen is used by Japan. And the euro yen is the exchange rate between the two, which goes up and down as they strengthen and weaken. Does that help? Would you like me to analyze it? So, yeah, basically selling. I don't think you've probably been in here, have you, Rudra? But basically, the US dollar yen is up at all-time highs. So the 150 level on the US dollar yen is where the market tends to pull back from, because it's uneconomical for the Japanese to trade with the US above that level. So when you get above this level, and this is the all-time high, you tend to get threats from Japan about intervention, because if they have their currency devalued against the US dollar more than this level, it becomes uneconomical to transact. So what they do is they liquidate overseas assets and buy the yen with them, which strengthens the yen, and you get what's called an intervention move. So an intervention move is one of these, which is somewhere between a 300 to a 700% of its average daily range move in one go. There's another little one there. This is the level they tend to happen at. So what we're expecting at the moment is either the market to stall out and start to buy the yen, because if they don't, the Japanese will force them to do it anyway. Why have you just repeated the question, Raja? Please explain about the euro yen. I'm just doing it. Yeah. So, yes, this is I'm explaining why the euro yen is going to come down. Euro yen is going to come down because of the US dollar yen state at the moment. It's up at all-time highs. So the euro yen is coming down at the moment. And when that US dollar yen drops, this will drop further and faster. Brian needs another towel. What about the New Zealand dollar US dollar? I've already covered that. No, I haven't. I covered New Zealand dollar CAD, didn't I? Basically, it's the same thing. New Zealand dollar US dollar and the New Zealand dollar CAD. Very similar price action, very similar movement. So at the moment, it's weak. I'd be looking for buys. I've only had 2 trades on this. Oh, no, 3. No, 4. God, I've done loads on the US dollar. New Zealand dollar, US dollar over the last couple of months. But so yeah, I'll be looking for buys at the moment. Hit ADR. Support basically is a little tricky on this one. So this orange line that I've put in is kind of a weak support area. So, but it's a big, strong push down. So if it continues any further, be looking for that little pop up, but Not the greatest opportunity in the world, New Zealand, US at the minute. US dollar is very strong. There you go. CAD I'm just about to get out of. God, look at that swap again, look. Oh, I'm just going to jack it in now. Oh, because shit, my close all button, shouldn't I? I'm so used to just closing out manually, I've forgotten about that button. Out CAD yen, so just reduce the exposure down on that one. Still holding euro, yen, and US yen shorts. Right, that's it for today. I will be back on Monday at 8 o'clock, and we'll have a look at everything, basically, and see how everything's going. So today, all you've got to worry about is potentially Powell. Powell at 1 o'clock. And that's it. So CAD retail might move the market a little bit. Other than that, I don't think a lot's going to happen today. The market is in shock after this week's movement. So I wouldn't be surprised if it just sat sideways today and did absolutely nothing. But we have got some movement going on, as we've seen with ADRs. So we'll see. But yeah, we'll have a look at everything in a little bit more detail on Monday, see how it's all going. Anything else you need, I'll be in Telegram and Discord. Other than that, have a lovely weekend, and I will see you guys next week.